What's up, YouTube? Welcome to another exciting personal finance video where I'm talking gold, silver, debt, stocks, all that good stuff. If you guys are into that, please like the video, subscribe to my channel, and check out my website, My Road to Wealth and Freedom. The link is in the description down below. Quick disclaimer, I'm not a financial advisor. The channel's for entertainment purposes only, so please do your own research, consult with a financial advisor before making any investment decision. All right, guys, today is February 21st, 2022. And what crazy time. Just when you think times cannot get any crazier, I'm just constantly amazed at how far off the rails everything seems to be going. Of course, in Canada, the big news is the big crackdown on the trucker convoy in Ottawa and at the border sites. Of course, Prime Minister Trudeau invoked the Emergency Powers Act, which has only ever been used in World War One, World War Two, and like the FLQ crisis in like 1970. Incidentally, I think it was his dad that invoked it back in 1970. Anyway, it's just is this what's come of democracy? In Canada, we have the Charter of Rights and Freedoms, and it's unclear whether or not any of this passes muster with regard to a charter challenge or just legal. It hasn't even been debated in Parliament. The rules of the act are that you invoke it and you debate it, and none of that's taken place. Debate was shut down the other day due to a police operation to remove the protesters and all this stuff. I think worldwide, and this isn't Canada is quite an extreme example, but this just goes to show that around the world people are really getting fed up with all the lockdowns, all the just the narrative surrounding the health crisis and stuff like that. It's just a lot of people are really sick and tired of it. I myself am. We've faced shutdowns after shutdowns. The province of Ontario has had school closed throughout the pandemic more than any other jurisdiction on earth. Our kids are suffering. There's huge challenges. They need to go out and play. They need to, form those social bonds and learn how to interact with one another. I see in the U.S., CDC came out with something saying that kids' speeches are delayed because they can't see people's mouths move to learn words and form their words because everyone's wearing masks. And all for what? We're just told wave after wave after this stuff it's going to be the end of the world, and it ends up being like the most minor thing ever. So rightly so, people are starting to stand up and refuse, to take the government BS. It's just a really bizarre time. But anyways, I don't want to go down too political, get too political on this channel because I don't want, I don't want to get shut down. But that's just there you go, a threat to free speech right there. You got to be careful what you say, or you'll be silenced if you don't, conform. I just find it just so, I'm an educated guy. I knew a lot of educated people, and it's just funny how everyone feels like they're so highly educated and enlightened and so smart, and yet they silence opposition. They silence other opinions. We've been seeing this for at least since I've been in grad school. The left has really sort of taken over academia and forced out a lot of people who think differently and who don't fit and conform to the sort of woke sort of views that they espouse. And just how it's just so weird how people, freedom loving people, when faced with true threats to their freedom, they just fall back in line of, stick with the government narrative. I feel like a lot of that is just fear mongering on the part of the government. But anyways, I really gotta stop speaking this stuff right now. So, all right, I'm moving on to financial and economic news. I've been doing some reading. I'm always reading articles and stuff like that, but I came across a pretty interesting thing. This is a bit dated. This here is from January 28th from Better Dwelling. And I remember reading this a few weeks ago. I might have mentioned it in one of my prior videos, but it says here, Canadian average net worth nears $1 million as growth rises 3 times faster than normal. Yes. And if you kind of read through here, Canadian households seeing their net worth soar, at least on paper. That's key. It's fine to be rich on paper, but if you don't have income, if you don't have any sort of savings backing up, you know, anything you may own and the value of it in, you know, this bubble mania, I mean, you're not going to survive on the other side of all this. And we've seen this time and time again. So data shows household net worth made a big leap in Q3 2021, mostly due to real estate. Well, Canada has been on a tear for 20 years with real estate. It never seems to go down. It only goes up and up and up. It's a huge proportion of our economy, and it's a staggering proportion of household net worth. Millennials are seeing a big surge due to real estate. Those without any real estate are falling behind. Okay, well, that goes without saying. Canadian households. So I guess that message is, if you're a millennial, go all in on these record high housing prices, just so you can don't miss out, right? This is the whole FOMO thing. Canadian households have seen their net worth rise 3 times faster than normal. And if you kind of dig down through, which I did, I printed some of this stuff off. The millennial net worth rips higher, but 80% is due to real estate. Yeah, so the millennial cohort, they're all in on real estate, basically. Millennials have the least wealth, and most of it in real estate, which is great because that never goes down. Not. The average millennial household's net worth reached $491,200 in Q3, up 38.7% from a month before. The gains in real estate were equivalent to almost 76% of net worth increase. Real estate represents a share equal to 82% of their net. So they are all in on this one asset that we all know is in a huge bubble. They're at a huge risk of rising interest rates. So let me guess, most of these millennials went with a variable rate mortgage, which means, interest rates as they increase, so does your payment. I mean, that happened to me back when I had my first house back in 2004. I was on the variable rate too, and I went through 6 25 basis point rate hikes before I finally locked in. And at that point, my weekly mortgage payment had increased $150 for a grand total of almost a little over $600 a month, just for that, right? But you wait, stay tuned, guys. It's going to get a lot better here. So anyways, huge risk there. Generation X is the most real estate wealthy cohort. Gen X have seen their largest increase, looking at dollar terms. Average net worth increase have reached 1.26 million. So everybody's millionaires, and this is what I've been talking about in my videos. If you've been talking, I talk about net worth, I talk about passive income, talk about building true wealth and the importance of eliminating debt. And this is exactly why. Yeah, it's great. Yeah, everyone's a millionaire. And this is what I keep saying. There are $1 million homes everywhere. You can't even get a townhome in most of the big cities of Southern Ontario without paying $1 million for a thing. It's insane. But anyways, it's up 30% from the year before. Real estate gains were equivalent to 54.4% of annual increase. So half of it is in bubble real estate. The value of real estate reached 57% of their net worth. So they're a bit better off than millennials. At least they're not all in on real estate. But then again, what's the other, what is it? 43% in, let me guess, stocks? Let me guess, Facebook or whatever, who knows? Boomers have less real estate, but there's a catch. They have a net worth of 1.336 million. So, not a whole lot more, not even 100 grand more than what Gen X has. The gain in real estate is equivalent to 39% of their thing. 40% total net worth. This demographic is lower, bringing in an interesting conflicting data point. And the article went on to say, I didn't cut and paste it out here, but it basically went on to say that the largest numbers of new mortgage generations have been in the baby boomer cohort, which raises all sorts of questions about pricing and stuff like that. How much real estate is going to hit the market when this cohort kind of dies off? Anyways, that's just kind of one thing I've been looking at. If you guys follow this channel, I don't buy into all these bubble numbers. Since I bought this, my current home for about 800 back in 2014. Today, it probably has a market value of 2 million. Do I feel like I'm a multi-millionaire? Like this is what I mean. This is how ridiculous all this stuff becomes. Am I jet setting off to all sorts of different places? No, I I guess what it comes down to is, in my heart of hearts, I don't truly believe that any of this stuff is truly sustainable long term. I think things are going to massively correct. Of course, I don't have a timeline on that. But I'm just thinking people need to start thinking about their personal finances differently. They really do, because we are really truly in uncharted territory, especially now. In the U.S., their inflation rate was about 7.5%. In Canada, we have, I think it's CPI rose 5.1% in January from a year earlier. That accelerated from December's pace of 4.8%. So inflation, not only is we're at decades high, multi-decades high, back to like the 80s and early 90s. But the pace of inflation is accelerating month to month ever so slightly, 4.8 to 5.1, but nonetheless, it's accelerating. Now, I've been complaining about inflation forever, and constantly seeing our paychecks, eroded by, all sorts of raises and if you have insurance, long-term disability insurance, the prices for that are outrageous. If you have 5.1% is a huge lowball number. Now, in fairness, I don't know how Stats Can calculates the inflation rate. I don't know what sort of shenanigans and tricks they use to kind of make it seem not that bad. I guarantee you, I just filled my wife's car up with gas today, and it was $75 at the pump. It was $1.57 a liter. This is crazy, and it's hitting the average. This is what I keep saying. It's the average. Like, the middle class is going to get killed by inflation, because, as we just saw in this other article, everyone's money is tied up in bubble real estate. That is going to have a severe correction when interest rates start to rise as central banks around the world try to fight this inflation. Food prices, groceries, our insurance goes up at least 10% a year minimum, and it has for several years. So none of this stuff is new. The cost of food, we're subjected to all kinds of shrinkflation, in addition to just higher inflation and stuff like it. They do all sorts of tricks and shenanigans, and people used to eat steak. Now they've gone to chicken. Now they've gone to tofu and stuff like that. It's just, be real. So I do know, if you guys want to check out John Williams over at Shadow Stats, he calculates inflation for the U.S., might I add, the way they used to do it back in the day. They've changed the way they measure inflation so many different times, and it's all just basically to make sure that we don't show any inflation. Anyway, if you check his stuff out, it's, according to him, this is a U.S. Numbers as well. True inflation is running around 15%. And here in Canada, I can certainly believe that. Just look at what it costs to fill up at the pump, natural gas prices, food prices, all sorts of stuff, insurance, oil changes, just everything under the sun is just... Anyway, so we're kidding ourselves when we think like inflation is not a big deal. And, like I've been saying, if you check out my blog, My Road to Wealth and Freedom, the link is in the description down below. You'll see... Oh, what was I going to say? I just lost my train of thought there. Net worth is all fine and dandy, but, we're really being hit with a bunch of different things. And none of this really has, a good ending. And I guess I just remembered. Okay. So yeah, what I was trying to say is, like, I'm trying to basically prepare for two completely contradictory worst case scenarios here. And it may not end up as a worst case scenario, but we do have super high inflation and we have super high asset prices. And, the two extremes are either, inflation is going to kind of erode our purchasing power, um, and basically kill any sort of financial paper assets, or on the flip side, we're going to get, a deflationary bust that's going to take everything down. And how do you really prepare for that? Well, you can do for inflation and even deflation, I guess you get some, gold and silver, gold in particular, some tangible real wealth. Also for inflation, or deflation, you can have just cash, as unpopular as that is. And on the flip side, for inflation, you want to have, commodity stocks, commodity exposure to commodities, metals, real estate, that type of stuff. Um, the other thing in a deflationary scenario is that you really don't have any debt. And I'm still not, even in an inflationary scenario, you probably don't really want to have any debt because your cost of living is constantly increasing. So if you don't have that mortgage payment, um, you're giving yourself some margin. You're creating a buffer. Yes, rising prices are eating away at your purchasing power, but if your overhead expenses, if you can kind of make one of those disappear. Maybe you have a car payment, you pay off the car, and you get another, $300 to $500 a month. That does kind of cushion the blow and lets you live to fight another day anyway. But yeah, I just want to kind of bring some of all this, the inflation and the record high asset prices and stuff, real estate, just how dangerous of times that we really truly live in. People genuinely believe that real estate's not ever going to go down. And in fact, the narrative here in Canada is that we have a shortage of real estate. Of course, governments are trying to come up with all sorts of plans to tax it, whether it's just going to be a flat federal tax, or a tax on capital gains. Maybe they'll let the first couple $100,000 of capital gains go, but anything above that, you're going to be taxed. 50% added to your. It's just, again, which is going to completely destroy the wealth building qualities of real estate here in Canada. We cannot deduct our mortgage interest on our income taxes like our friends in the US can. And the flip side of that is that they have to pay capital gains tax when they sell, and we don't. But again, this just goes to show that the governments can change the rules on a dime. You may not have any warning, very little warning, if at all, when these things sort of come to pass. And for the average middle class household, whose 80% of their wealth is tied up in real estate, I mean, they're gonna get killed. And this is Trudeau and these left-leaning politicians, left-wingers, and that, they always try to say, I'm the friend of the people. I'm the friend of the people. And their policies target it, although they claim that these policies will target the rich. They don't need a few extra $100 a year and this and that. It always falls onto the shoulders of the middle and lower classes. And it's just the way it is. The only way to get ahead, if you own real estate, and that has been a tried and true means of building wealth long term for middle classes since, I don't know, since the 50s anyway. Now they're looking at taxing it over and above a certain amount. So they kind of just get you coming and going. Meanwhile, you shoulder and harbor all the risks. We're subjected to a risk, interest rate risk. If rates go up, the average mortgage here in Canada renews fixed rate mortgages. They renew every 5 years. Many people are on variable rates because interest rates can never go up. You're just kind of getting squeezed from all directions. So I just don't see any of this as like conducive to this broad-based happy narrative of the post-COVID recovery is going to be boom time. What we're seeing shortages across the board. We're seeing high inflation, record high asset prices, all of this stuff. I mean, where does it end? I mean, I don't know. I have to think at some point, it's prices are going to have to come down. I mean, it's seriously insane. What's the average income of Canadians versus the average price of a home? People are getting priced out, and that's what that Better Dwelling article essentially said. Is that, people are starting to get priced out, and it doesn't really bode well for the future of real estate. Who's going to buy all this real estate? You just bought a home for $2 million that a few years back was half a million. Um, who's going to buy that from you a few years from now? You know, Everyone's getting priced out. We have inflation, we have all sorts of crap happening. So anyway, the other thing, this is going to be a bit of a longer video today, guys. I hope you enjoy it. Sorry if you don't. One of the things I've been doing, I don't know if you guys have been following all the geopolitical stuff, the backdrop to all the economic crap, record high debt. The US just broke 30 trillion February 1st. I'm sure you all seen videos about that. And if you watch the debtclock.org, Canada's in a horrible situation too. For a country of our size, we owe over $1 trillion. Over half that was thanks to the one and only Mr. Trudeau in the last 5 years of his prime minister as prime minister. Um, anyway, but against all of that stuff, so we have all this economic malaise. We have all sorts of craziness. Against that backdrop, there's some real serious geopolitical tensions in the world today. Of course, what's in the headlines now, and what's causing gold and silver to start soaring is the Russia-Ukraine the threat to invade Ukraine. But prior to that, everybody was talking about the Chinese threat to Taiwan. That was a big deal. None of both issues are still here. They haven't gone away. It's just varying degrees to which they get reported in the media, I guess. Um, but these things have happened before in history. If you don't understand any history, if you read anything about the international system, global politics, and war and peace and all that stuff, um, these things have happened and will continue to happen for many years to come. And I just want to bring to light here. I'm reading this book. I'm not sure if you guys care too much about reading big books, but this is Henry Kissinger. He wrote a book on diplomacy back in 1994. It's a very, very good read. For those of you who know a little bit about international relations, his main thrust and stuff like that is all about the balance of power system that had existed after the Napoleonic War, even back as far as like Cardinal Richelieu during the reign. I think it was Louis the 14th or something like that. So you're talking like from, I don't know, 1600 to the post Cold War world. So this book was written in 94. So at that point, you know, um, things in Eastern Europe were pretty messed up, but it's not super super current. But it's just a very interesting read. I've read a lot. It's kind of like a general sort of text. You can read about all the different peace settlements, the Congress of Vienna, Versailles. Post World War II. That's kind of at the point where I'm at right now. But it's very very interesting talking about different powers, global powers, and all their interests and spheres of influence, and how the U.S. policy was guided by more so like idealism, the Wilsonian ideas of rights, self-determination, collective security, all that stuff. So very very interesting and very very timely as well. I've had this book on my shelf forever. I skimmed it when I was in grad school as I was rushing to read a million of these books. Of course, when you're skim reading things, you're not really retaining much at all. And I've just been kind of taking my time reading, a chapter or two a day. Um, Anyways, and if you guys aren't reading, if you don't know anything about history, I would encourage all of you to go check out some of these books. Another great book that I don't have anymore, but I really enjoyed it. Sort of like a general sort of text. It's Paul Kennedy's The Rise and Fall of Great Powers. He takes it back to like the Ming Dynasty in China. And just goes through all this. The central argument in that book was all about like how military and economic fortunes basically shape the world order, the international system, and that. So very interesting. And these are things that we should all be doing. I honestly feel like part of the problem nowadays is that, we just don't have like an educated population anymore. We just have like, it's almost like that movie Idiocracy. You know, the more advanced our societies become, it seems just like the more dumbed down and stupid we've become. Read some books, learn new things, challenge your assumptions. Kissinger, you know, a lot of people have issues with him, but take it like it's just take it at face value. You don't have to agree with everybody. What I'm finding fascinating is his analysis about the different motives and the different interests at play. And I mean, he's like a seasoned diplomat. He's been a professor of international relations forever. Reading books, whether or not you agree with the author, you can still learn a lot. I've had to read tons of different books in my life, about people who I completely disagreed with, but you can sort of respect their position, their argument, and respectfully disagree and have your reasons. It doesn't have to kind of degenerate into name calling and just basically all the stuff that we see today. Yeah, so anyway, I'm gonna leave off there. I hope you guys enjoyed this discussion of some various things. And oh, in all of this, I even forgot to mention gold and silver. So the whole Russia Ukraine thing is saying gold and silver soaring. Silver is almost $24. If you guys caught my last video, I just bought 26 ounces when it was a lot lower. I think since then it's probably risen about 10%, maybe a bit more with premium. Gold too. I was looking at picking up another piece of gold, but hey, just it is what it is. We live in uncertain times, and I do believe the right approach, at least for me, what I've been doing is, and I guess on behalf of my family, getting out of debt, all debt, including mortgage. As it stands now, we owe less than like, I don't know, 19,000 on the house. It's gonna be paid off by summer, and we're just investing, stacking cash, buying gold and silver. Although I won't be buying any right now. I think this Russia Ukraine thing, my own thoughts on it is chances are it's gonna subside. When that happens, you're gonna see gold and silver collapse. Not collapse, but they're gonna go down quite a bit. Um, and then the big thing coming up in March is the Fed's going to start raising interest rates. So my guess is at that point the Bank of Canada will move, and we'll kind of see where all this stuff shakes out. Usually the spring isn't all that great for markets anyway. Not like I'm a huge market timer, but usually it's pretty rough. Right now, people are throwing money into their RSPs to save on taxes, and where's that money going? Probably into index funds and stuff. That's the other thing too. Passive investing has become such a huge thing, and I was watching this really interesting video. I forget who was talking about it, but they were saying how they don't really believe in passive investing because when people start losing money, they're no longer passive investors. They're hitting the sell button. They're trying to get out of these mutual funds and that, and it's so true, right? This market narrative, the market psychology, it really doesn't change. No matter what shiny objects are in front of our face today. Human behavior, human emotions never, ever, ever change. They're unchanging. People always respond to the impulses of fear and greed. And it's been that way for, since time immemorial, and it will continue to be that way. And which is why I'm completely confident that I don't think this time is different. I think we're going to see a huge market correction, and a lot of other assets prices are going to go down the toilet as well. I just want to be prepared. It's impossible to completely avoid that kind of a fallout, but I think if you're into sound money like gold and silver, if you have some cash, if you have little to no debt, then you're probably going to be set up in a pretty good spot to weather whatever storm may come. That's it today. Hope you guys enjoyed the video. Please like the video, subscribe to my channel, and check out my website, My Road to Wealth and Freedom. A link is down in the description below. Thanks so much, everyone. Take care.